Okay, good afternoon to each and every single individual out there. Okay, so hopefully this video will be fruitful to you all guys. So basically the purpose of this video, we're just going to be focusing on what on our ratios. So this was the question in which was assessed in the first 6 months. Yeah. It's June 2024 paper. So we'll basically be dealing with ratios. So in this paper, they assess you on two ratios. You know that we have various ratios. And then one thing that I always say about the ratio is that it's paramount for you to know your formulas for ratios. If ever you know your formulas, it's going to be much more simpler for you to calculate and deal with your ratios. So let's start with this question paper. So for 4.2.1, they said that you should do your what? Trade payables, settlement period in days. In days. So we said that if ever they say that you should calculate it in days, in your formula there, you are supposed to times by 365 days. So our answer should have days. So as I said, your formula is important. So let's go in our answer sheet to draw up our formula first. You always start with your formula. So we know that our formula for this ratio is what? Is average trade payables. Average trade payables divided by what? Divided by credit purchases. And then you multiply your answer by 365. This is your formula for trade payables settlement in days. So we know that for us to get average in accounting, we always say what? Opening balance plus closing balance, and then we times it by half. Or alternatively, we can just say opening plus closing and divide by 2. It's still the same. So let's go check for our average trade payables. So we'll say opening balance of our trade payables there. Let's go in our formula. They did provide us with our trade payables there. Our trade payables, in the information, they said the following information was taken from the financial records of Melody Traders for the financial period ended on the 30th of March 2020 and 30th of March 2021. So financial year begin or commence in 2020 and then it will end in March 2021. So meaning your opening balances are the 2020 and then it closing 2021. So opening balance for trade payables was how much? It was 110,000 rand. So say 110,000 rand, and then our closing was 390. Just say 110 plus 390,000. So 110,000 plus 390,000 rand. And then close bracket. And then remember that I said that you can do it in two methods. You can either divide by 2 or multiply by half. So let's divide by 2 so that we get our average trade payables. So that we get our average trade payables. You should also insert it in your calculator. You see how much you get. You can pause a video for a moment and do your calculations. So we'll say 110,000. In your calculator, 110,000 plus 390,000. And the answer that we get, we divided by 2. So we get 250,000 rand. So 250,000 rand is our average trade payables. So say 250,000. Your formula says that you should divide by what? You should divide by credit purchases. So we know that our business acquire products in two methods, can either acquire this method on cash or on credit. So let's go to our information to see what is the methods of acquisition. So let's go to additional information. We have our purchases for 2020 and 2021, but then Tina will be focusing on the current ones, which is 2021. The first bullet says the business uses periodic inventory system. Second one says that both sales and purchases are on credit only. So we only acquire our products on credit. Our purchases are on credit. So 100% of what? Of our purchases are on credit. So meaning our credit purchase or that amount of purchase of 475,000 rand will be our credit purchases. So let's divide by 475,000 and times by 365 days. And then we'll get our answer there. So let's also insert it. Individually, you can also pause the video and do a calculation. So say 250,000 divided by how much? 475,000 rand. And times your answer by 365. You'll get an amount of 192, 1 days. But then you know that when you're dealing with these things, each and every single time when you have commas, you cannot have a comma 1 day. It's highly impossible. So we'll round it off to what? We'll round it off to 192, 193 days. So answer will be 193 days there for our trade payables settlement in days. So let's do the second one. The second one is inventory turnover rate. Inventory turnover rate. As I always say, your formula is paramount. So our formula for what? Our formula for inventory turnover rate is what? Is cost of sales divided by average inventory. Cost of sales divided by average inventory. Average inventory. Right? So the purpose of us doing this inventory turnover rate, what are we looking for? What is the mandate or the purpose of us doing that ratio? We are checking the rate in which we sell our trading stock. Hence, we're supposed to do that thing. So we're checking the rate in which we sell our trading stock. So our formula is cost of sale divided by average inventory. So let's proceed with our question. Let's check our cost of sales and see whether they provided us with cost of sales or not. In your table there, they did not provide you with your cost of sales. You only have your inventory, your purchases, trade receivables, and also trade payables. Let's go to bullet number 3, our additional information. In our additional information, they say that the business says a target for gross profit percentage of 20% on cost price. So the purpose of them providing you with that percentage, we are going to use it, or we are going to use it when we calculate our cost of sales or our sales. And then the business allows trade receivables to pay within 30 days, and trade payables receive 60 days credit. Inventory turnover rate, that one is not important. So here, this markup, it was going to be much more simpler for us to use it if ever they provided us with our let's just say they provided us with our sales. It was going to be much more simpler for us to calculate this thing if ever they provided us with our sales, because we're just going to say use that formula that we know, wherever we say an amount times what I want over what I have. So they say that they use a markup of how much? Of 20%. So we're going to say cost of sales. Our cost of sales is always 100%. And then our sales, we know that it's 100% plus our markup. So meaning our sales was going to be 120%. Right? And then gross profit is 20%. And then we are going to use that amount or that formula where we say amount times what I want over what I have. Right? Let's just say hypothetically, so they give you your sales amount as 1 million rand. As 1 million rand. We are going to use that formula where we will say amount in which they provided us with is 1 million rand. And then we'll use that formula, amount times what I want over what I have. What are we looking for? For cost of sales, we'll say 100 divided by what? By 120. The percentage in which you're looking for is 100%. And what do we have? We only have our sales. But in this situation, we do not have neither our sales or cost of sales. So it's futile for us to do this thing. So it's going to be much more complex to do this thing. So that is the first method of us calculating our cost of sales. And also you have the second method in which you can calculate our cost of sales. Whereby we say what? Opening stock. Second method, we say opening stock plus our purchases plus our transport cost if ever we have transport cost, which is carriage plus our carriage on purchase. If ever we brought abroad, we're going to add carriage on custom duties or import duties and minus purchase returns and also closing inventory. So that is that second calculation we're going to use it here because they provided us with those relevant amounts. So you have your opening inventory and also you have your closing inventory and also you have your purchases. So we're going to use that second formula. We'll say opening stock. Our opening stock is 70,000 rand. Therefore, we'll say opening inventory, we'll say 70,000 plus our purchases for the current financial year. Our purchases for the current financial year is 475 plus 475,000. Do we have a carriage on purchase? In this situation, we do not have carriage on purchase and also do not have what? Custom duties. Also, we do not have what? Purchase returns. So we'll only minus this thing, closing inventory, in which it was 90,000. In which it was 90,000 rand. So let's just insert it in our calculator to get our cost of sales. So say 70,000 rand. 70,000 rand plus 475,000 rand and lastly minus 90,000 rand. So we get an amount of 455,000 rand. So 455,000 rand will be our cost of sales. 455,000 rand. So it will be our cost of sales. So let's go. Say 455,000. And then we're going to divide it by what? We are going to divide it by our average inventory. I said that in accounting, for you to get your average amount, you say opening plus closing, multiply by what? Half or divided by 2. So for us to get our average inventory, let's check our opening inventory there. Our opening inventory is how much? It's 70,000 rand. We'll say 70 plus 90. And then times it by half or divided by 2. So maybe average inventory can do this calculation here separately. 70,000 plus 90,000 and divide by 2. I think we're going to get 80,000 rand, but then let's confirm it. Affirmative. So our average inventory will be 80,000 rand. 80,000 rand. And therefore, we'll say 455,000 divided by what? Divide by 80,000 rand. And then we'll get our answer, which is how much? Which is 5, comma. Let's round it off to 2 decimal places. 5, comma. You'll get 5,6875. 6875, in which you can round it off to 2 decimal places as well. As 5,69. So remember, your answer should have the weight times. Should have the weight times. So that will be your answer for inventory turnover rate. So the rate in which we sell our trading stock is 5,69. If ever your questions said maybe should round it off to a nearest digit to a nearest rand or two decimally, I think they will specify in your question paper whether or how should you round it off. So unga worry regarding how you should round off your amount. So this is a question in which we're supposed to do today because many people were requesting it. So hopefully this video was fruitful and also hopefully is going to help you guys. And thank you for today. Please enjoy the rest of your day, guys.